Welcome to Skipping Stone's Japan Energy Market Update 2022. First, a little housekeeping. Be sure that your sound is turned on and your volume is turned up. In case you're not familiar with this system, you may ask a question during the presentation by clicking on the Q&A button at the bottom of your screen and typing your question into the window. We'll try to address all the questions at the end of the presentation, but if we run out of time and don't get to your question, one of the speakers will respond by email. Our speakers today will be Skipping Stone Japan President Shuichi Kishida, who will talk to us about Japan's energy market basics and trends. Executive Vice President Hiroshi Okuyama will give us a view of Japan's wholesale energy markets. And Peter Wygand, Skipping Stone Chairman and CEO, will share the opportunities available in Japan's energy markets. Shuichi-san, would you like to start us off?
Sure. Thank you, Nancy. Let me start. Today, I'd like to discuss first a brief outline of Japan's energy market. Secondly, what's going on in the current market. And then finally, review insight for the upcoming 5 years. Next slide, please. Next, please. Firstly, let me review the landscape of Japan energy market. 1.3 billion population market. Fourth largest electricity consuming country following China, US, and India. And we are the largest energy importing country. A unique feature of Japan's power system is to have two different electric frequency regions, 60 Hz for West and 50 Hz for East. This is background, cross-regional transmission capacity is limited. Next slide, please. This is Japan's energy mix of power generation. Our portfolio used to be balanced in the form of 1/3 each for gas, coal, and nuclear. All of a sudden, nuclear needs were entirely stopped by the Great East Japan earthquake and then consequent Fukushima nuclear disaster in 2011. Then we increased our dependency on LNG and gas to cover the shortfall. At the same time, we have started our ambitious renewable development. Still achieving the government target in 2030 is not easy. Next slide, please. This slide shows how Japan's electricity market is structured. METI is the sole regulator to oversee all power market across Japan. For the generation side, 10 utility and about 1,000 licensed generators are the market participants. For retail and trading side, we categorize the 1,000 market participants into 3 groups by function. PPS for retail and wholesale, balancing group, and traders. Next slide, please. This is a system to operate the physical electricity market in Japan. T&D division used to belong to the 10 big utilities, but they were legally separated in 2020. T&D company responsible for grid operation also assume final guaranteed supply for the users. It has revealed creating a big mess in the current market turmoil. I will speak about this further later. Next slide, please. This slide captures how Japan's power market has evolved since the full market liberalization started in 2016. In the beginning, about 10 international power retailers entered the market. They struggled in the early days of market liberalization, as the market was not yet properly developed. Specifically, the wholesale market needed were yet developed at that time. Especially absence of future market for hedging was crucial for power retailer who didn't own generation facilities. In order to penetrate into the market, the majority of the new market participants were obligated to follow the utilities tariff in each retail market. A few years later, after 2016 market liberalization, various markets such as baseload, capacity, and ancillary market were established. When the future market was launched by TOCOM and EEX in 2019 and 2020, respectively, the market captured the interest and attention of the major international players, such as Shell, RWE, Macquarie, and Castleton Commodities. Next slide, please. This slide shows how the wholesale market, JEPX, has evolved. While the new market participants have increased their market share from 5% in 2016 to 21.3% in 2020, the power trade volume in JEPX has also sharply increased from 2% to 40% of the total power demand in Japan. At the same time, price and volatilities are increasing significantly, I should say. It is bad for consumers, but not bad for traders. Next slide, please. Now let me review the first 5 years of power liberalization process in Japan. In the beginning, many new retailers enter the market, mimicking utility price plans. Then competition squeezed the margins. Wholesale market emerged. JEPX volume grows. Octo launched capacity market. Two future markets started. Ancillary market, and so on. The market has got many complications and confusion by this movement. And the volatility, huge price swing, retailers with mimic price models suffers. Traders rejoice. Renewable model shift, shifting from FIT to FIP, and developer needs to customers for PPA contract. Offshore gets excited, but takes time. New laws for aggregators is coming. Retail modeling shift. About 50% of retailers go out of business. Most stop taking customers. On the other hand, progressive retailers have already shifted to market-based pricing and offer model. Next slide, please. Next slide, please. Now let me review what happened this year. Outbreak of Russian-Ukraine war, astronomical price increase in fossil fuel, especially coal and energy. Japan's wholesale power market jumped up. Margin loss in power retail business. Utilities are experiencing significant financial loss. Many PPS go bankruptcy. Stop margin loss contracts. Not accepting new enrollments. Many industrial consumers utilize the final supply guarantee from T&D companies. Currently, the utility are under preparation to introduce a new standard pricing. Meanwhile, new energy sector development, such as hydrogen, is strongly encouraged by the energy price inflation. Also, the government has finally stepped in to support restart of nuclear unit and the development of the next generation nuclear system. Next slide, please. Let me review the hot area now, So carbon neutral 2050 net zero. This has a bigger impact than liberalizing the energy market. C&I customers confusing. And the PPA, BPA, developer need a customer to sign up. But a customer still doesn't understand well how it work, and maybe it is slow to jump in. Carbon market coming soon. Over 400 C&I customers, they call the GX3, signed up to start on April 1st, 2023, next year. Demand response, METI pushing this as a solution to seasonal generation tightness. Nuclear comeback, Prime Minister Kishida pushing hard. Now 60% of population is in favor for restart. Carbon neutral is impossible without nuclear. Hydrogen, strong support from the government with ambition to be #1 player in the world. Next slide, please. Finally, let me try to predict what will happen from now on. So firstly, near term in the current marketplace, expansion market-based pricing, deliverable trading will take off in this market as well. Further expansion of renewables, increased demand and the value for ancillary service will increase. Retail consolidation may occur. Toward the carbon neutral goal, expansion of battery and the energy storage solution using hydrogen, we expect it's a big opportunities. Natural gas continues to play a crucial role in the energy transition. Nuclear come back to a certain level. Hydrogen, ammonia to pave the way for mainstream. Carbon market to play a vital role in this transition. That's the end of my presentation. Thank you for listening. Now let me turn this floor to Hiroshi.
Thank you, Shu-san. Hi, everybody. I'm Hiroshi Okuyama. I'm happy today to talk about some developments of Japan's power wholesale markets. Next slide, please. Let me start with the regional power market size in Japan. This is the national demand statistics by region in 2021. There are 10 zone areas in Japan, which are divided into 2 large areas, East and West by frequency. East with 50 Hz and West with 60 Hz. Tokyo, of course, Japan's largest consumption area, belongs to East, and Osaka, the second largest, belongs to Kansai, and Aichi Prefecture, the heart of Toyota, belongs to Chubu. And by large, both Kansai and Chubu belongs to West. Total East annual demand was 395 terawatts hour, and West was 442. In total, 837, according to the national agency's regional power demand statistics in 2021. Next slide, please. This chart shows monthly generation and demand statistics since April 2016. Red line represents total generation by registered power companies. The histogram shows demands by voltage, such as extra high voltage, and low voltage. You could see the supply-demand situations in Japan have been very tight, as the total generation and the total demand are very close month by month. Next slide, please. Japan has 3 physical power wholesale market venues: OCTO, JPX, and EPRX. OCTO stands for Organization for Cross-Regional Coordination of Transmission, which pretty much is a national ISO. Among other important duties, OCTO operates capacity market. JPX, which stands for Japan Electricity Power Exchange, runs day ahead, hour ahead, base load, non-fossil certificate, as well as inter-region transmission rights markets. JPX has world market, but not much active so far. EPRX, which stands for Electricity Power Reserve Exchange, is coordinated by a Transmission and Distribution Grid Council, which members are 10 utility T&D companies. EPRX is responsible for balancing reserve and ancillary markets. Next slide, please. Let's take a look at main wholesale markets, starting with Octo's capacity market. One of Octo's major responsibility is to secure power supply and transmission stability nationwide, short-term, mid-term, and longer-term. So they are responsible for the capacity markets. Utilities want to secure incomes for building and maintaining generators in the future. On the other hand, retailers want to secure the future power supplies in the capacity market if those prices are affordable. The numbers here are the summary of the first two capacity auctions held in 2020 and 2021 for capacities. For 2024, for capacities 2024 and 2025 respectively. The first 2020 auction was priced so high as over 14,000 yen per kilowatt hour that drew lots of criticism. Second one came down dramatically. Most of the regions settled around 3,500 yen, but Hokkaido and Kyushu settled higher than those regions. Next slide, please. Next, let's talk about JEPX. JPX is the main power wholesale exchange, and its spot is the most actively traded power market in Japan. Each non-utility area, except for Okinawa, finds every 30 minutes slot kilowatt hour usage price called area price a day before the delivery day. Any uncovered position after the spot could be covered at our head market until 1 hour before the delivery time. Any uncovered balance after the hour ahead market will be subject to imbalance charges. Now, it is said that the market structure will be transformed to somewhat like a northern market style, where kilowatt hour and balancing capacity will be traded at the same time. But however, it is take more than 5 to 6 years, or maybe more, as grids and IT infrastructure have to be upgraded to support those changes. And then for sure, it will cost a lot of money. Next slide, please. These are the histories of daily volume spot and hour ahead market from April 2016. Daily spot volume had been surging exponentially until 2019, but after COVID, the growth has been somewhat flat. Spot daily average in fiscal 2021 was almost 1 terawatt hour, and that of hour ahead market was 23 gigawatt hour. Annual spot market volume in fiscal 2021 was 327 terawatts hour. That makes 37% of Japan's annual demand, whole nation. Next slide, please. This chart shows a Tokyo and Kansai area spot market daily average price from September 2021, which is 1 year ago. Blue is Tokyo and orange is Kansai. After Russian-Ukraine crisis, Tokyo became more volatile than Kansai because Kansai is more hopeful for nuclear plants restarts, and East area has been slow. In nuclear, East area has been slow in nuclear restart development, despite the government push. So, East is more vulnerable for fossil fuel prices and also transmission constraints. Next slide, please. This is the spot price comparison for the same time of the period of the year 2021 and 2022. Left is east price, and right is for the west. Both are between July 1st to the end of August. Orange line is for 2021 and blue line is for 2022. You can see the both east and west in 2022 have been hovering more than double of 2021 in the same time of the period of the year. Also, you can see west has less spike than east. Next slide, please. This is the comparison of Kansai and the Kyushu area 48 hours daily average price since the beginning of this year. Blue is Kansai, orange is Kyushu. Kyushu consistently discounted to Kansai, as you see in the gray territory. However, there are occasions that Kyushu has to receive power supply from external area due to unexpected weather conditions that triggers unexpected power demand in the supplying area. Both Kansai and Kyushu belong to West, but each has quite different power price activity profile. So although there are transmission limits, there seems to be good market opportunities there. Next slide, please. Let's take a look at hour-ahead market activity. Big difference between spot and hour-ahead market is spot has only one fixed price, but hour-ahead has multiple prices with trading continuously within the 30-minute slot. This is the intraday chart of spot system price and hour-ahead market of the last 7 days of August. You can see the white and black bar represents hour-ahead each slot's open, high, low, and close for the 30-minute slot. The red line represents the spot price of the same slot of the delivery day. While spot has only one price at the slot by its nature, hour-ahead market prices swing quite a bit even within the same 30 minutes window. Next slide, please. This is the same type of chart, but only one day for August 3rd this year. August 3rd, delivery day, the market was very volatile. As you see, the red line, spot had high 80 yen kilo per hour, which is already very high. The hour ahead with the candlestick chart went up as high as 200, 250 yen on the same delivery slots. So our head is very active, volatile. So to provide liquidity to the overhead markets and to contain the volatilities, also not to waste the available balancing capacity, it is proposed that unused balancing capacity be able to inject it to the hour-ahead markets. Next slide, please. As for imbalance charges, the mechanism to calculate the penalty has changed this April. There are detailed and event-driven elements to be considered, as in the number here from number 2 to number 5 to calculate the imbalance. Basically, the new key factor of the new imbalance fee calculation is based on marginal balancing capacity cost which will have been auctioned and published in EPRX balancing market. Thus, the imbalance penalties became somewhat predictable ahead of the hour-ahead market. Next slide, please. JPX also runs baseload auctions. In the beginning, it used to be 3 times a year, but from last year, 4 times a year. Baseload market is basically a market to provide to retailers full year baseload procurement opportunities for the following fiscal year. The auction prices are getting higher since the utilities are not willing to commit prices too low, as the international fuel costs are getting very higher. Also, you could see the gaps between East and West widen dramatically at the first auction for the next fiscal year, reflecting the nuclear restarts conditions between East and West. Next slide, please. As for balancing and ancillary markets in Japan, it is called supply-demand balancing or power reserve in Japan. There are 5 balancing and ancillary markets planned at Electricity Power Reserve Exchange or EPRX. So far, 2 balancing markets with 45 minutes and 15 minutes response time have started. Other 3 shorter response time markets with 5 minutes and 10 seconds will be starting step by step from 2024. Next slide, please. And lastly, let's move to talk about the futures market. As many of viewers may know, there are 2 exchanges listing Japan Power Futures. One is Tokyo Commodity Exchange, is so-called TOCOM, which is under Japan Exchange Group. And the other one is European Energy Exchange, EEX, under Germany's Deutsche Börse. Both list base load and peak load. Area-wise, TOCOM calls East and West, EX calls Tokyo and Kansai. Both prices are indexed to monthly average price of spot, Tokyo and Kansai area. There are 2 big differences. One is contract size. TOCOM's contract size is 100 kilowatt hour, and that of EX is 1 mega hour per each contract. Second difference is that TOCOM has only monthly contracts spanning 24 consecutive months. EX has shorter 6 to 7 consecutive months, plus yearly, seasonal, quarterly, and weekly contracts. Next slide, please. This graph shows the developments of power futures markets by combining 2 exchanges volumes and open interest. Blue bar histogram shows end month open interest, which is remaining futures positions at the end of each month. And orange line is the 3-month moving average of the monthly volume. Total open interest of EX and TOCOM combined as of the end of August was about 2.5 terawatts hour. Next slide, please. Let's take a look at futures market price activities by futures forward curves. These are the hypothetical and synthetic futures curves using the futures settlement price. These are created for reference only. Blue lines are East area curves and orange ones are of the West. Under the green box, these are East and West futures curves as of the end of January this year. And those under the sky blue box are for at the end of the August. Here, you could see again the impact of Russia-Ukraine crisis as of the August curve levels got elevated way up comparing to those of January. Also, spread forecast between East and West became even wider in the longer term future. Near term futures, East and West spread is 5 to 6 yen, but that of long term after April 2024 is more than 10 yen per kilo hour, which is aligned with aforementioned fiscal 2023 baseload market, where the gaps between Tokyo and Kansai was about 30 yen at the first auction in July this year. Okay, that's it for today. So in Japan, so many factors, new markets, developments, more to come in Japan market. Thank you for watching. Now I hand it over this to Skipping Stone CEO Peter Wagan.
Thank you, Hiroshi. Now we get to what do you do with all this great information from Suchi and Hiroshi? Obviously, the markets are still maturing, still more things to come, as you've seen in the prior stuff. So I'm going to talk about some of the opportunities that I see and have seen in my 9 years in Japan. Next slide. So first of all, why this market? I mean, I think Suchi talked about how big it is, the law for carbon zero. Many other countries are considering it, like the US. Different states have different rules, but not the whole country. When everything changes, I think Shuchi said that the carbon neutral or carbon zero will be probably a bigger impact than the regulation itself. I agree. The wholesale market's still young. Young markets, in my experience, having been at this maybe a few years, healthy margins. Mature markets become very thin margins from a trading standpoint. Largest retail market in the world. There's something like 83 million meters that you could sell to between the commercial, industrial, residential. There's still some 75-78% of them still could be signed up, especially now that there's turmoil. I'll talk about that a little bit. One single regulator, less confusion, more certainty in the regulator arena compared to many countries. And the country, opposed to some of the others we're involved in, follow the rule of law, so that matters. The other key point I want to make is for international entrants, we worked with some 20s plus. The Japanese value the skills, knowledge, and business models that come in. In fact, they probably are going to replicate it if it works well. But the faster the success is based on how fast you can adapt it to Japan. So next slide. So the carbon market, this is just tip of the iceberg kind of stuff. The carbon market itself starts next April. There's a trial run by JPX who's going to run that market coming here probably in a week or two, something like that. Like every carbon market, there's annual reductions or buy credits. We're already seeing carbon credit brokering and trading on behalf of customers. Some of the big wholesalers are starting to offer that. The energy efficiency we think is going to crank up. It's been there, but it's going to be stronger. The software, we've seen a number of these startups pop up with GHG, ESG tracking. I think some of the ones that are already in Europe or US markets are going to be pretty attractive if you localize them. On-site solar and storage, because of the high prices, is making sense, plus the need to reduce carbon. Those start to pencil better. We're seeing a lot of activity in hydrogen fuel cells, helped a lot by large government subsidies and grants for this area. The renewable PPAs and VPPAs, I'm going to talk more about that in a minute. And then the corporate energy procurement and sustainability consulting. I'm going to also talk about this one in a different slide. Next. So the feed-in tariff to the feed-in premium conversion opportunities. Of course, under feed-in tariff, the utilities were required to buy it at whatever the government published rate of the year was. no particular risk. Developing renewables pretty simple. You build it, utilities will take it and pay you. No big deal. Now that's feeding premium where their prices are tied to a JEPIC spot formula. So that changed everything. So now the generators, renewable generators, need to find off takers or sell it into the market. Typically generators don't really know either one of those. So there's a new kind of service called renewable aggregation. There's actually a METI license for this to basically provide the market services for the generators, for the renewable generators. The trading, JEPIC spot formulas and term fixed and many other angles around the renewables, especially because the feed-in premium formula is JEPIC spot. So that's basically 30 days or even less. So most renewable contracts or even end user contracts need to be longer than 30 days. We're starting to see a lot of activity and interest in PPAs and VPPAs. We've been getting calls from some of the big end users as well as the developers. How do they work? I think those that have experience in lessons and formulas and models from US and Europe, et cetera, or even Australia can do very well in this market. Now that the retailers are starting to offer those kind of contracts, are going to need a trading partnership. And municipal markets are also being pushed heavily to become carbon neutral and go into the renewable business. Next. So retail, one might wonder with 15+% or 20% of the markets shrinking but to personally having had a retail experience in the past, too many came too soon. Many of them, no idea how to be a retailer or even how to spell electricity. So they've exited the market, probably a healthy thing in the long run to thin out that. Many of the existing retailers are not either accepting new customers or they're not renewing customers on existing terms, what I call the utility mimic. Looks like the tariff, just a retailer instead. Fewer accepting and moving to a market-based formula. So those that come from other markets like US, Australia, UK, et cetera, they understand how to do dynamic pricing, block and index, all the things that you do in all these other markets can do very well now. Some of the retailers that came early wanted to do those, but the wholesale market and the futures market didn't allow that. So that's all changed. Plus, from a customer standpoint, now customers don't know what to do. So where to go? The retailer they maybe chose doesn't want to renew with them or isn't accepting new customers. So where do you go? So again, the opportunity to come in at the low point in retail where a lot of them have gone out, that'll swing back. It always does. Retail will be hot again. Give it time. Next. Trading, I think Hiroshi's showing you various charts. If you make money on arbitrage of differences, you're going to do very well here. Just looking at Kyushu versus Kansai, where he had that chart, you can trade Kyushu, you can trade Kansai separately, or you can trade East, or you can trade West. So there's a lot of market price opportunity. Plus, you have the spot versus the intraday. There's money being made there. Base load versus futures, money to be made there. Kind of money to be made in trading anywhere you look at it. The volatility, they're starting to see some people trade EEX versus TOCOM to arbitrage that, especially in the out months. We see the bilateral market starting to crank up, partially because the METI has pushed the IPPs into more bilateral. Plus, I think even for the generators, while they're enjoying current high prices, stability is going to make sense. So moving to bilateral, and the OTC derivatives is still in infancy. Money to be made if you're willing to take the risk. Next. Long list of technology, energy trading risk management systems. Because of market-based pricing, if you don't have one of those, you want to be in retail and trading, you're kidding yourself. Asset management around the generation, whether that's market management or SCADA systems to be able to automate the scheduling, all those kinds of things that didn't used to be needed. Energy end user management, whether that's dashboards, gets into the GHG, ESG tracking software. Next generation billing systems that can handle market pricing as opposed to utility tariff and dynamics. Some of the US systems we're familiar with do that. Hasn't been valued in Japan. I think it will be now. Retail brokering platforms to do the switching. There's some of those in Japan, but they're not that automated. And they don't really do dynamic pricing. Demand response obviously is going to be pushed. It's got a niche. And then the grid solutions, distributed generation, storage, those are hot. Next. So these are a couple of keys. I could go on for an entire hour on this. What we see, because we've done 20 plus of these market entrants, everybody knows the market they're in. So they immediately start comparing Japan and how does it work versus what they know, UK, US, pick one. This is fine, but Japan is different enough. And I think you could see that through the two gentlemen's presentations of why it's not the same. It can't be operated like it's another market. It has to be its own operation. You have to have bilingual resources. Everything's in Japanese. You'll go crazy trying to translate it all. Plus, just business culture wise, I've found over the years, even the way they say a sentence might be in English, what it means is different in Japanese. So you have to have bilingual resources to succeed. The faster you adapt your business to work in Japan under their culture, the better. And then if you plan to operate outside of Japan, which we know people do, especially in the wholesale, they'll trade from some other location, maybe even some of the back office. You're going to need somebody in Japan to be your representative just to do day-to-day business. The other two keys is patience. Everything takes longer in Japan. I like to give the example. I could set up a corporation in the US in about an hour with my Visa card online. In Japan, that's about 30 days to do the same thing. That's just an example. The other part kind of goes with that is the attention to detail. Documents have to be perfect. The wording, so that this striving for perfection means things take longer. It gets reviewed longer. More people look at it. They want it to be right. So if what you submit in a filing or so forth isn't, it gets rejected. Sometimes for something as simple as the signature is on the left side of the page instead of the right side of the page, therefore we can accept it. So there's a whole litany of these kind of things. We have a free guide on business etiquette, everything from how to bow, what to do, what not to do. Feel free to contact us. Be happy to send it to you. Next. I'm not going to get into this. You can go to our website. This is all there. This is the sales pitch part of the presentation around how can we help you get into Japan. Everything from planning and prep to launch and market services themselves. I want to leave more time for the Q&A at the end because I'm sure by now a number of us come in. So maybe if all the panelists want to rejoin me, and Nancy, I'm sure you've got questions for all of us. Thank you.
Here we go. I have a question for Shuichi-san. When will the new standard price be announced by the electric utilities? And what will it look like?
Okay, Nancy, thank you. Good question. So for C&I customers, it should be revealed in October, November timeframe this year, so that it can be reflected in the new fiscal year contract to start from April 2023. Conceptually, to maintain stable supply assurance, suppliers need to secure cost and reasonable profit. Then they may introduce a new price formula, which reflects the wholesale power market price for the portion of each supplier's dependency on the wholesale power market. It is on top of the existing fuel cost adjustment factor to reflect the cost of importing fossil fuels.
So Sue, let me clarify. So the utility tariff for the business customer is moving to a market-based price as opposed to the traditional fixed price plus fuel cost adjustment. Is that what you're seeing?
That's right. On top of the fuel cost adjustment, utility is going to introduce new index to reflect the Japan's wholesale power market.
Great, thanks.
Hiroshi-san, this one is for you. Are negative prices allowed in the spot market and the hour-ahead markets in Japan? And if not, are there any developments for that?
Thank you, Nancy. Yeah, also this is a good question. The quick short answer is no. There is no negative pricing on those markets yet. However, there are voices and inquiries from traders or power business people of introduction of a negative pricing in those spot and hour-ahead markets. Personally, I like the idea because it would reflect the real demand supply situations, and the price will find fair values by true market forces. That's why it is internationally acknowledged. However, it seems from the regulator standpoint in Japan, it's a different story. It's not really viewed as positively. At one conference I attended a few months ago, one of the regulators sent in a reply about the question about the negative pricing. They are studying. They acknowledge the demand for negative pricing. But one of the hurdles they're facing is that the negative pricing may increase the volatilities of the already volatile market prices, because the price range will be widened. Well, I'm not really necessary to agree with this theory, but that's where we are at this moment. But I think the discussion will continue, and then I think we should continue to raise a voice about the introduction of negative pricing. Thank you. That's all.
Okay. This question is about the bankability difference between the feed-in premium and a PPA. Peter, do you want to take that one?
Sure. Basically, financing a project, a renewable project, or actually any generation project for that matter, based on the feed-in premium formula, which is basically JEPIC spot average. I think it's going to be pretty hard to finance these unless you do just pure balance sheet. So I think the drive towards PPAs with 15-year type terms is going to be a driver not only for the generators, but it's also going to be a driver for the corporate customers, which we're seeing in other markets, especially the US, where that's an answer to where their carbon requirements get reduced significantly. And in some types of customers, especially in the data center world, have pretty strong mandates on their own to become carbon net neutral. But the bankability, absolutely, a PPA is far better than feed-in premium. Thanks.
Let's go back to Suichi-san. How is the government's interim target of the energy mix? How is that going to be? Let's see, the target is 2030. How will that be accomplished?
Thank you. In short, it is not easy. I may say difficult. We need to utilize nuclear, but to achieve 22 to 23% target by 2030, it is not easy. And expectation on renewables is very high, of course, but expansion to 36 to 30% is also challenging. because availability of offshore wind around 2030 should be limited. And realistic and imminent solutions should be solar, because expectation of further expansion of solar. So when we look at the fossil fuel, due to Russia, Ukraine, and the Europe situation, covering the shortfall by energy and coal is getting more difficult and difficult from the both perspective of the availability and the price nowadays. But still, certain portion of gap may need to be filled by energy and coal with CO2 solutions. And early penetration of carbon credit will expand option for Japan. Yeah, that's my answer.
Yeah, adding to your observation, one of the big gatekeepers I see are the hurdles is transmission. All this offshore, for example, I was reading through the Octo transmission, national plan. They didn't even plan to have offshore transmission access until 2030. So even as they start auctioning these areas off the ocean, there's nothing there yet. So that's pretty aggressive to expect a whole lot of renewable without transmission, whether that's solar or wind. So that's just one of the observations. So transmissions probably should have been one of my opportunities. It's just a different kind of opportunity.
So, Peter, there was a question about, in your view, what will it take for Japan to reach net zero? Is that what you guys have been?
Yeah, I think we both covered that pretty
That's
well.
what I was thinking.
Yeah, let's do the next question.
Yeah, okay. Let's see. Hiroshi-san, how can an international player trade the Japan Power Futures EEX and TOCOM? And especially for TOCOM, is there a hurdle? Is language a hurdle? How is that?
Thank you, Nancy. Yes, for international players, I think more easy for them to trade EX because EX clearing members are mostly European, big bank, and then the brokers of the international brokers are the member of it, so they speak English, and then maybe account opening process maybe easy, and maybe you can go through other international broker who has omnibus account with the EX clearing banks or brokers. For TOCOM, it's not difficult, actually more easier, because it's TOCOM members, clearing brokers have been accommodating international players, traders, brokerage accounts decades. And I was there, and they have English speaking brokers in like a corporate department or international departments, and so international player can go through directly with TOCOM clearing broker. At the same time, you can contact with your international broker who have the omnibus account with TOCOM clearing broker. So either way, there's no hurdle in language wise, and maybe the issue could be the currencies, because you may have to deposit in the Japanese yen, but some international broker would accommodate the different currency for a margin deposit, and also some Japanese broker would accommodate the different currency other than Japanese yen. So it's not TOCOM is or international futures exchange. So they've been doing decades, so there won't be any problem to trade Japan market.
Peter, do we have time for another question, or?
Yeah, let's make this the last one.
Okay.
I'm sure you have
then,
more. We'll get to those when one of us will email people.
Right,
Go ahead.
great. Okay. So Peter, how are customers responding to the wholesale market volatility? What's your take on that?
Yeah, it's interesting. We're not normally a end user consulting company. In fact, we rarely do that. But our phone has been ringing a lot from especially the extra high voltage, which is the 2 megawatt and upsize customers, especially those that are even bigger. You know, a lot of confusion. Their traditional supplier no longer wants to serve them. They don't know where to go. They don't know who's doing market-based pricing. Mostly there's no energy manager on site. So, the energy broker consultant market's infant. So that's a big opportunity to come in and basically be their outsourced energy department. The other thing is the sticker shock. I mean, for the last several years, at least, setting your annual budget as a big end user's been pretty flat, maybe a few 5% increase or whatever. Now, all of a sudden, the price has doubled, tripled, and your utility is telling you, I'm not going to renew. They're filing for market-based prices. That's what she just talked about. So what to do? They don't know what to do. So they all are looking for new answers, new solutions. So it's a good time to be a retail solution provider that has some answers. So great. Well, I'll wrap this up. Thanks for watching, everybody. Nancy will get out an email with a link and a copy of the presentation. One of the three of us will respond to your various questions. Look forward to talking to more of you about Japan opportunities. Love to help you. Thanks for watching.